Markets head into today's FOMC with near universal expectations for a hold. So, this meeting is much less about the rate decision itself and much more about Powell's tone, the inflation narrative, and whether the Fed leans towards validating market calm or pushing back against it. The consensus across the board is that policymakers stay in wait and see mode, but there's much less agreement around the messaging, particularly with oil driven inflation risks rising and markets increasingly debating whether the next move is delayed, easing, or simply higher for longer. The biggest question is whether Powell treats the energy shock as something transitory the Fed can look through, or something with broader second round inflation implications that warrants a more cautious or even mildly hawkish tone. That matters because markets have not fully priced a classic risk off, dollar positive response to geopolitics, which means a hawkish surprise could have outsized impact through a stronger dollar, softer equities, and tighter financial conditions. A second major focus is whether Powell signals any shift from the prior meeting. Most major houses expect him to emphasize optionality and patience, but some are looking for a subtle acknowledgement that inflation risks have become more two-sided. There's also added sensitivity around the fact this may be one of Powell's final major meetings before a possible leadership transition becomes a larger market theme, which could give today's communication added weight. For markets, the base case is straightforward. A neutral hold with balanced messaging probably keeps the current mix intact: softer dollar bias, resilient equities, and supportive conditions for risk assets, including crypto. But if Powell leans hawkish and emphasizes higher for longer because of oil and geopolitics, that could be the catalyst for the dollar catch-up rally that many have been fearing. And then there's the other layer, tech earnings. Even if the Fed lands cleanly, markets still have to digest whether big tech validates stretch valuations. So in many ways, today is less one event than a handoff. First, Powell sets the policy tone, then earnings determine whether risk appetite can hold. The big takeaway is that the Fed is expected to hold, but the tone around inflation, oil, and policy persistence is where the real market risk sits. That's all for now.